This week's Market Monitor is digging for value. Not an easy task in a growth market. The last time he was with us was in August of last year, and he picked Shire, which since then is up 16%, Amerco, that's added 4% since then, and NCR, which has declined by 13%. Back with us, Richard Steinberg. He's President, Chief Investment Officer of Steinberg Global Asset Management. Rich, always good to see you. Thanks for joining us.
Always good to see you, Bill.
2 out of 3, I guess, is not bad. Do you still like NCR?
We own all three. NCR, I think, will start to come along as the financials start to pick up. And, you know, when you buy these value stocks, you have to look out 3 years on them.
You are a classic value investor, and I always ask you, when we're in the midst of a market like this where we sit near all-time highs, is it tougher to find value right now?
Yeah, we've been digging deep. Our analysts are scrubbing not only numbers, but also conference calls to see what names are just kind of out of favor but not broken. And that's why we have 3 new names today that fall into that special situations category.
First up, NovoCure in cancer treatment.
It's a really interesting oncology play. They have a technology called Tumor Treating Fields. The device is called Optune. It looks almost like a sci-fi cap that goes on the patient's head. And with chemo, the science has been excellent. We think the stock is worth $54 or 40% higher here. And if the FDA gives them approval down the road for other tumors, either below the neck or brain tumors, there could be even more upside to that name.
And yes, I was going to say that has had a good ride this year, especially the last couple of years, as a matter of fact. Here's now Yelp. Now here's one that has suffered, and you have to, again, you're trying to find one that has value that's not broken.
Yeah, this is not a FANG name. It's busted, but certainly not broken. The stock, connects consumers with companies. It's an ad play. Many people have seen the Yelp reviews either on their iPhones or online. It's really also a millennial play because millennials won't make any decisions without looking at an app. The stock has no debt, trades at 24 times cash flow, and we think it's worth $64. A lot of upside to this. Also, they've been growing their earnings at 43% per year over the last 5 years, and we think it's cheap. It could also be an acquisition candidate down the road if somebody wants to be in the space.
Finally, American Tower. So many people pick this one in the value space. It's a real estate investment trust. I'm surprised it doesn't yield more than it does. It's only 2.19%. I guess that's a function of its stock performance as well, huh?
It's also a growth REIT, yeah, and they're constantly reinvesting. They have 160,000 sites throughout the world, 44% of their business is outside. But we like this because it's an oligopoly. You have American Tower, you have SBA Communications, and you have Crown Castle. And they're the 800-pound gorilla. The stock trades at under 18 times free cash flow. The stock's been beaten up because of some issues in consolidation in India. But we think the stock's really interesting at these levels. We have a $180 price target, which is 30% from here. And I think it's a name you can put away for 3 years.
All right. Rich, always good to see you. Enjoy the rest of your summer.
Take care. Bye, Bill.
Richard Steinberg with Steinberg Global Asset Management.